you're watching BTTV. This is Market Today. I'm Tanya Aneja, and with me, as always, is Shail Bhatnagar, our markets editor. Well, festive cheer is all around the Lal Street, and as markets approach Diwali with a positive frame of mind. But what should be your strategy going forward? We'll discuss this and much more. But first up, the top headlines for you. Indian stocks are likely to edge higher on Thursday as overseas cues remain positive for equities, with crude oil and US 10-year bond yields slumping further. And it's the weekly expiry of Nifty that will keep traders busy today. Meanwhile, sectors such as OMCs and paint companies will enjoy further bounces as crude oil prices fall substantially. Traders may also remain glued to fertilizer, railway, and defense counters on the long side. Good morning, Shell. It's a fresh Thursday morning, and festive cheer is all around the Lal Street, and not only on the Lal Street. Mumbai is all decked up, and I'm very sure you must be celebrating it in Delhi as well. But coming back to markets have been resilient so far, and yesterday also we ended marginally higher, and we are seeing sharp drop in crude oil prices as well. That's another positive for the Indian bulls. But I want to understand from you now that what should be the strategy going forward, and where do you see Nifty?
Good morning, Tanya, and a very, very warm festive greetings to thousands of viewers who are now joining us on a daily basis simply about the kind of stock picking that our team does for intraday trades. So coming first to your question, Diwali celebrations are in full flow across the swath of North India, and it's parties galore from 6 p.m. onwards till 4 a.m. in the morning. I came back home at about 5, and then I started work for this particular show. So the next 4 or 5 days are going to be very, very pleasant as far as parties are concerned, and it's the same sentiment that we are enjoying on the Lal Street, Tanya. You mentioned 2 or 3 good points. Crude oil prices now are at their lowest since July 21st. They bring a lot of relief to India's overall fiscal balance sheet, as also good cheer to the Lal Street. That's happening. We'll discuss a couple of sectors related to them a little later. But Nifty, let's get Nifty's chart in front of you. And the daily picture, Tanya, continues to improve. Remember, it being Thursday today, we have the weekly expiry of Nifty, and the index is up 1.3% over the last 5 trading sessions. We've seen the Bank Nifty add 1.2%. So the sentiment is pretty good. Even yesterday, you saw the Nifty sideways, but it still added 36 points, 19,443, and it is now consolidating above the 20-day moving average. Tanya, this is the most critical moving average when it comes to checking daily sentiment. Anything above 20, anything above 10, anything above 20 is bullish. Anything above 10, 8 and 5 is extremely bullish. So now we are above 20, and we've traveled the distance from 18,850 to 19,400 over the last 7, 8, 10 sessions. That zone has been covered, and now all statistics, when you look at the options chain, suggest that buy on drip will be the best strategy for Nifty. You see very, very strong supports on option writing when it comes to the Nifty options chain. 19,300, 19,400, 19,200 are constantly being strengthened by bulls, which they want not to give back to bears. So the structure for the Nifty is very positive. We'll have a flat to sideways trade because it's expiry related today as far as options are concerned. But sentiment across the board is very, very good. Buy on dip is going to work, and any dip towards R1, intraday resistance R1, which we always mention on air, should be an opportunity to get back into the market. So any dip towards 19,400, 19,375, 19,350 is an opportunity once again to get back onto the Nifty on the long side. Tanya.
Absolutely, Shell, and I think buy on dip strategy that has worked so far. But coming for the Nifty Bank as well, fresh weekly expiry now starts on Bank Nifty, and the trend is positive there as well. The index has added 1.2% in the past five trading sessions. And yesterday, if you see, the index was volatile, of course, because of expiry. It ended marginally lower at 43,658 odd levels. But what are you looking on Bank Nifty today, and what are now the fresh support and resistance levels?
So, Tanya, as you rightly mentioned, last 5 days have seen the Nifty Bank move up substantially. You have the daily chart in front of you, and the 200 DMA was reclaimed by a jump all over it. This was 3 sessions ago, and we are seeing constant built up of strength when it comes to the index in particular. You rightly mentioned that today is the first day of the weekly expiry for Nifty Bank, and for the moment it seems to be hemmed in by 44,000 as far as the upper level is concerned. That's the 34 EMA. Not many people track it, but it works wonderfully well when you're looking at intraday price moves. So 44,000 is a very, very strong resistance as far as Bank Nifty is concerned. It gave back next to nothing in yesterday's weekly expiry, down just 80 points at about 43,658. And if you see the rally, that's moved from 42,134 on 26th October to about 44,000 now. So it's a 2,500 point rally in the last 4 plus 4, 8 plus 2, 10 sessions. So 440 points you've added each day, Tanya. And for those of us who remember buying into Bank B's ETF, the SBI Nifty 50 ETF, that was near riskless money that was made buying this weakness, buying this pain in both these major indices. So at the moment 44,000 is a resistance. Again, buy on dip is going to work pretty well, and you see very, very strong supports coming in at 43,500. So both indices are in fine shape, and let's see how today and tomorrow pan out ahead of Diwali. Of course, we have Muhurat trading as well. So that's how the situation is, Tanya. Party scene on the Lal Street.
Okay, party scene on the Lal Street. That's the word coming in, and keep an eye out on 44,000 and 43,500. These are some important levels. But coming to FNO space now, I remember we discussed a lot of stocks in the afternoon trade yesterday. But talking about today, what are you looking at in the FNO space?
So Tanya, there was a blowout on the Nifty Pharma Index yesterday. I have a very beautiful chart which I'm hoping I'll post on Twitter when it comes to the index. A very strong breakout happened on the Nifty Pharma Index yesterday, 15,497. I have a lone pick today which I'm tracking, and that's Lupin. Earnings came in post market hours yesterday. You have the daily chart in front of you, and let me just share the number with you. Consolidated net profit was 490 crores for the quarter gone by versus 129 crores. So a very, very sharp outperformance, and it's also better than the estimate of 367 crores. So estimate is 367, the number is 490 as far as profit is concerned, compared with 129 crores a year ago. Revenue was 5,040 crores versus 4,146 crores, and this also was much, much ahead of estimation. Now coming to the technical part of Lupin, the chart is in front of you. The good part here is that there is intense short covering happening on Lupin, and just a moment, let me just give you the right data. Yes, I'm sorry, there is a very, very strong buildup of long positions. Open interest is up 38% yesterday. The stock price surged 3.4%, and delivery was flat. So Lupin is one of the stocks that I'm looking at as far as the long side trade is concerned, Tanya.
Okay, absolutely got that. So that was the FNO space data for you. But coming to global markets, Shell, we are getting positive cues from the global markets as well. It was a momentous day on Wall Street yesterday. S&P 500 finished 0.1% higher. It marked the longest winning streak since 2021. Nasdaq also, if we see, that was up around 0.08%. That was the ninth winning day for Nasdaq. And then if we talk about Dow Jones, it was down by 0.1%, 34,112. That was the level on Nasdaq. Oil prices, that slipped and remained under pressure on Wednesday. Actually, Brent slipped below that $80 per barrel mark as well. Gold prices also retreated for the third straight session on Wednesday. So I want to understand from you now that what is now essential to track from all these overseas cues.
So only two things, Tanya. You've mentioned crude oil prices. Like I said, the lowest since July 21st, and they are dipping well below the 200 DMA. This is good news for India's balance sheet. Also for stocks in the OMC as well as the paint space. The other thing that I'm watching is the US 10-year bond yield. Just on 23rd of October, this was standing at 5.00%, the 10-year US bond yield. From then, it's slumped to 4.48%. So that's a dip of somewhere like 0.32 percentage points, which is a huge move, and that's reflected very well. So tepid US 10-year bond yield, weak crude oil prices is what India needs, and that is getting reflected across the board when it comes to the market. I think our guest, Mr. Chakri Lokpriya, is with us. He's the CIO and Managing Director for TCG Asset Management Company. Good morning, Mr. Lokpriya. Festive greetings and a very warm welcome to you on Market today at BTTV. How do you see sentiment on Dalal Street amongst all this festive cheer, and what are you buying?
Good morning. Thank you very much for having me, and happy Diwali to all of you. And clearly, yes, I think the festive season has further reinforced with positive earnings upgrades across various sectors. So that's welcome news. After 2 years, we are seeing revenue upgrades in the market for some of the important sectors in manufacturing, in banking. And banking is very important since it provides the liquidity and credit to the markets. And second, as there are revenue upgrades, therefore the valuations keep getting revised down because the multiples re-rate. And as a result, I think, the market, in spite of its about 10% rise in the last 1 year, still is very favorably priced.
Fair point. And where would you be deploying unit holders funds at this point of time? As you very rightly mentioned, the Nifty is up somewhere like 7-8% year to date as far as 2023 is concerned. But we've seen blowouts happening on the auto index, the PSU banking index, the pharma index, the FMCG index. Mr. Lokpriya, this is a crisis of plenty that we are facing on the Dalal Street. Where is your money getting invested?
Absolutely. I think you very aptly said it, captured it. It is a crisis of plenty. And that's the good news, which is because we're seeing so many upgrades across both the frontline as well as the broader market. And the broader market, even though it's done far better than the Nifty, still there are earnings upgrade. If you look at manufacturing, the large cap, which is L&T, the company is on target to beat its revenue guidance for the full year, even after a very strong set of numbers. Now, if you go down the curve, all the various spending by the central government and the state government on infrastructure, defense, railways is paying out. And this year, roughly 10 lakh crores is going to be spent by the center. The spending by the states is up about 42%. And therefore, and also the PLI incentive schemes for various sectors is all paying out well. And therefore, manufacturing, PSU banks, and as well as some pockets of defense and railway still look good.
Okay, these are some of the pockets. Keep an eye out on these. And Mr. Lokpriya, very good morning. This is Tanya joining in the conversation, and festive greetings to you first of all. And actually, I want to discuss IT sector with you. I mean, we were discussing KPIT Tech, Birla Soft yesterday, and how these mid cap IT names are outperforming their large cap ITs. So I want to understand from you that why are large cap IT names not performing when you compare it with the mid cap IT names?
The large cap IT names have very strong order books. The problem has been in the execution of the order books. So there has been a delay in translating some of the order book into revenue. And that's because of the uncertainty that is happening in the US, in Europe. And because 90% of all the revenue comes from these two geographies, therefore they are facing that problem. On the other hand, the mid-cap IT companies are more sector-driven. Now, whether it's KPIT, which is more focused on manufacturing, where a lot of spend is happening in automation and move towards AI and some amount of towards machine learning. And therefore, the earnings, the order book is also being translated to revenue. Therefore, I think, these niche companies within the mid-cap will continue to do well. And as far as the large cap IT, until the interest rates peak out, which is probably another few months away, until then they'll probably tread water.
Okay, and what about these pharma stocks, Mr. Lokpriya? How is US FDA positioning itself on Indian pharma? And I'm asking this because of, ahead of the US elections.
Yes, usually every time the US elections happen, clearly there will be some amount of greater regulator scrutiny of all pharmaceutical companies. There will be greater pricing pressure. And so in the case of pharma, it is not a sector approach. It needs to be more stock-specific driven. And there are not so much earnings upgrades and revenue upgrades happening in the pharmaceutical sector. So outside of maybe individual companies like Alchem, we are largely staying away from pharmaceutical as a sector because we are finding greater opportunities elsewhere.
So, in your answer, Mr. Lokpriya, rests my next question. Where do you see these opportunities in India, and how are you positioning fresh inflows in your India fund across the Lal Street? What is the breakup of buying blue chips, small caps, and mid caps?
Now, in terms of one is clearly power, and for the power sector, what we've done is Power Finance as well as REC Limited. These are the two government companies, PSU companies, which are lending across both the power sector and the infrastructure sector. In spite of the stocks have run up strongly over the last 1 year, the valuations are still very undemanding at trading at less than book value. And therefore, these stocks, again, with the new thrust on green energy plus a regrowth in the thermal energy, I think these are well positioned. Second, the companies which belong in that space, like the executors of that space, whether it is Suzlon, which has already run up quite a lot, BHEL now has had this fair share of run up, L&T. Then if you look at the railway companies, Titagarh Wagons, then in the defense is Mazda. I think these companies are looking very good because Titagarh Wagons as a company was focused only on one sector, one division, which is the Indian Railways, but now metro, exports, all of them are opening up and therefore well positioned.
Okay. Mr. Lokpriya, does it bother you somewhere deep, late in the night, as to how PSU stocks have already run up very sharply, and the kind of rally that we've seen from April onwards in mid caps and small caps? You mentioned with great how should I say, insistence and a very, very deep pocket about Mazgaon about Titagarh Wagons. These stocks have gone up 3-4 times already. Does it bother you?
See, if you, I think it's a very good question. If you'll take Titagarh as an example, now this company has its what you call order book, which is clearly visible for the next 5 to 7 years. Most of the orders are coming from government or government-related entities, so which means the order book is secure, the payments are secure, and it's only the question of them translating to revenue and earnings. And even after all the run-up, you still have the company trading at about 22, 23 times, which is still a very attractive valuation multiple given its earnings profile for the next few years. And also in terms of the, when I said order book, it's a secure order book. And in terms of the margins, margins are improving with as it's moving down the ancillary chains. And also can export as a new source of revenue, which was not there earlier. Metro as a source of revenue, which was not there earlier. So therefore, I think, these companies not long neglected for many years, but now are looking good.
Okay, absolutely got that, Mr. Lokpriya. But we are at the fag end of the corporate earnings season. So, what do you make of the earnings so far?
Crude prices have come off. Generally, commodity prices have come off. That is providing a margin tailwind. Second, there has been an increased demand. Volumes are growing up, so there is a revenue uptick. And therefore, usually whenever there is a revenue uptick, these are not one-off. That follows a cycle. And in that cycle, I think there is the next few quarters of revenue upgrades that we will see, which means it indicates a recovering economy and recovering corporate India demand. And that's always good news because that creates the growth rates, the CAGRs for the next 3 years and 5 years. So in spite of and actually the markets, because as we discussed, is only at about 7-8%. So it's not overheated market. Individual pockets have gone up, but that's because they're long neglected. So I think as we go into next year, they will see, because an election year, we'll always have good amount of infra spending. Second, hopefully once the US interest rates peak, then we will start seeing further improvement in the recovery of the economy.
Right. Mr. Lokpriya, the other thing I wanted to point out was that you've been watching Indian markets for the last 25 years, and we've shifted from being a smokestack economy to an entirely digitized space, from the lowest raw material producer to the highest OEM manufacturer. When you see this transition in front of you, do you look at internet companies as long-term bets? These are stocks that have come up on our radar over the last 2 or 3 years and have disappointed new investors but made tons of money for the PE space. How are you watching this one?
This comes and goes in cycles. Clearly, Amazon in the US went public some 30 plus years ago. And whereas the same type of companies are going public in India in the last 2 or 3 years. And so basically the same model readapted to Indian conditions when they went through a huge amount of multiple expansion and then a derating. So that is a natural path for the course which happens across markets. And they come and go in cycles, So from that perspective, as a space, there are lots of valuable companies coming out. But in terms of the valuations, I think, even now after the run-up of some of the companies like Zomato, I think it's time to, or even Nykaa, it's time to not plow further money into those companies. And valuations is a function of at which point they get priced out. As you rightly said, in some cases, the founders do benefit.
Mr. Lokpriya, we'll request your indulgence for a bit. The pre-open trades are in front of us. Let me just mark out a few stocks and then I'll come back to you. For the moment, it seems that Diwali celebrations are on their way significantly better on Dalal Street. The Nifty's opened, Tanya, 40 points higher. 19,483. Let's take a very, very quick look on stocks that are contributing to this mild uptick. I'm looking at Bajaj Finance. Remember, this was the last stock that we discussed in yesterday's 2:30 show. Now up a percent after that consolidative phase. You just might see a nice bump up, 75.31 in front of you. Let's look at the index heavyweights. I'm looking at HDFC Bank, completely flat, 1491. Reliance is at 2340, 0.2% higher. I'm keen to see what Infosys is doing, again flat, 1390. How about TCS, flat, 3387. Nothing much moving in terms of the index heavyweights except Bajaj Finance, which we've seen. L&T about a percent higher, 3022. Tata Motors 0.5% higher, 646. Corporate banks Axis and ICICI are mildly in the green. Let's shift focus immediately to FNO, which is beyond the index heavyweights, which is the top gainer. I'm hoping it's Lupin. Tanya, it's a 10% uptick on Lupin, 1332. I'm sure this price will trim it down, but a blowout that's happened on earnings, and technically the stock was very well put. Mr. Lokpriya's current favorite, PFC, is up almost 3.5%, 273. Bata is up a percent, 1570. You might remember discussing PI Industries, Tanya, 1.8% higher, 3645. It's Glenmark PEL emphasis also in the green as far as FNO stocks are concerned. On the losers side, bit of a disappointment coming in from GNFC. Earnings were tepid, down 2.8%, 673. MCX Balkrishna Industries showing bit of profit booking. NSE 500. Let's look at the top gainers. This is a power sector play, KPIL, and as luck would have it, Mr. Lokpriya also mentioned this sector as an investment theme. At the moment, 611. It had shown a 20% uptick, but let's see how it settles. Lupin, of course, we have Patanjali 1525, 5% higher, and of course we have a good company called Birla Corporation, 2.5% higher, 1315. This is how pre-open is, 28 points higher, 19,472. Let's get back to Mr. Lokpriya. So you mentioned obliquely that there are some parts of the market where you see bubbles forming, where you see a bit of overvaluation creeping in simply because of the way liquidity is flowing incessantly into Indian stock prices. What would be those spaces?
I think those spaces are still clearly the new age internet companies. After companies like Zomato had fallen and then they've risen again. Now year to date, I think Zomato is up close to some 80-100%. And so the valuation is again creeped back up. Yeah, and you'd take a company like Nykaa. Again, it has a fairly high level of debt, and therefore servicing that is also something what one needs to take into account in evaluations. So these companies have strong, sound business models, but it's still a long way to go for their profitability to improve. So I think there a bit of caution is advised.
Okay, absolutely. Got that, Mr. Lokpriya. But let's discuss PSU banking space as well. I mean, the numbers that are coming by, they are not that bad. I mean, if you look at SBI also, the bank posted good set of numbers. And there are some other large cap names as well. So we are getting good, stellar, I would say, second quarter numbers coming in from these banks. But what are your thoughts on PSU banking space and any stocks that you like from this particular space?
Yeah, among the PSU banks, I think if you take the large cap like SBI, or even the mid cap companies like Bank of India or Union Bank or Canara Bank, I think one of the important things that is all these companies are very attractively valued. Bank of India and Union Bank are still trading at about 0.7, 0.8 times book value. State Bank of India, being the largest bank in India, still trades at only at about 1.1 times book value. Now, before we get more into valuation, I think the important thing to recognize is India's growth, economic growth, has largely been led by services as an economy. Manufacturing represents hardly 15%. With a greater thrust in Make in India and PLI schemes, you're seeing a lot of initiatives by companies, and therefore manufacturing borrowing is increasing, and that borrowing largely comes from PSU banks. So they are the first beneficiaries of the Make in India initiatives and the PLI initiatives that are happening. And therefore, their loan growth will be far higher than, let's say, the non corporate focused banks. So, against that, so when you have a very healthy top line loan growth outlook going into the next few years, then when a company, why should State Bank of India trade at one time book value, where some of its private bank counterparts of equal quality are trading at about 3 or 4 times book value? So I think that is the thesis. So therefore, there's still a long way to go for these banks to do well.
Right, and this is the conundrum that Indian strategists, Indian asset allocators have been facing for the last 1.5 years or so. The price to book for PSU banks, in many cases, even after 100% appreciation in stock price, is still below 1. Let's welcome Rajesh Palvia into this wonderful conversation that's happening on where is value and where is overvaluation. And Mr. Palvia will contribute his might in picking individual stocks for today. Head of Technical and Derivatives Research at Axis Securities. Rajesh ji, welcome. Warm greetings to you. Festive cheer all around. Which are the stocks that are looking good?
Good morning, Shailji. Good morning, everyone. So, wishing you a very happy Diwali in advance to all the viewers of BTTV and BTTV family. Market is looking positive, and the kind of close which we have seen in the previous session above 19,400, we expect furthermore buying action to continue further, and 19,500, 550 is the level where we are expecting Nifty to move further higher. At this moment, our stop losses are trailed to 19,350. Till these levels are intact, view is remain on the bullish side. For Bank Nifty, 43,450 is our stop loss to hold a long position. And once the Bank Nifty manages to cross above 43,750, then there would be again another round of short covering we can see, and then maybe where Bank Nifty can scale up to the level of 44,000 level. On the stocks front, two stocks we have identified for the today's session. First is from pharma space, that is Glenmark. Very strong buying action in the previous session. Now stock is penetrating to its 50-day moving average. Looking at overall structure, stock managed to view breakout of its falling trend line on the weekly as well as on the daily chart. That clearly shows the trend reversal of consolidation zone. Looking at the structure and long built up, we expect this stock can continue furthermore upside towards 810. So one can buy with stop loss of 775. The second stock that we like is from the mid cap private bank, that is RBL Bank, is looking very promising. Since the start of this November series, we are seeing that
दीदी ये AC बंद
continuously stock is showing good traction on the buying side, and now stock managed to hold above 50-day moving average on a closing basis. The kind of addition which we are seeing on the derivative data, it clearly shows that furthermore traction on the buying side we can see towards 254. One can buy RBL Bank with stop loss of 234.
Right, and as far as RBL Bank is concerned, this has been one of the decent outperformers as far as the monthly expiry of FNO is concerned. This, of course, at the moment is a cash stock that we are showing. Let me just pull out the price, 240 for you, and it's moved up from 210, which was there on October 10th. Decent move coming in as far as RBL Bank is concerned. Mr. Palvia being bullish on Glenmark as well. Rajesh ji, a couple of views on PFC and RFC. There is no let up when it comes to these two counters, Power Finance Corporation and Rural Electrification Corporation. Does it make sense to chase these record highs?
Very strong price behavior for both the stock, and both the stocks managed to view breakout of its long-term chart consolidation zone on the monthly as well as on the quarterly chart. So looking at the breakout, yes, the trend is likely to remain on the bullish side. Though stock has already moved up sharply in last couple of trading sessions, so our advice would be, if you get any opportunity in decline, you can again buy this stock in the decline. but overall structure is bullish. So buy on dips should be your strategy for PFC. 250, 55 is the important level for trading perspective to again buy. Your stop loss should be at around 245 to hold a long position. For REC, if you get opportunity to buy near to 95, 300 zone, that's the again important level to buy. Your stop loss should be at around 288 to hold long position in REC. And on the higher side, we are expecting that this rally can extend further towards 330, 335 also in positional basis. So REC, PFC both are looking promising. One can buy this stock in decline.
Okay, absolutely. Mr. Palvia, tire space was buzzing yesterday, and that was on the back of stellar numbers coming in from Apollo Tires. So, a good amount of good set of numbers coming in from Apollo Tires. What do the technical charts now suggest for this counter?
Yeah, all three, four stocks moved sharply up in last couple of trading session. Apollo Tire is clearly showing good traction. Long built up was there. This is the second consecutive week where stock is making higher high low formation. Looking at the overall structure now, stock is poised for making a new all-time high also. So our view is bullish for Apollo Tire, and we are projecting target of 435, 440 in the continuation of this uptrend. Those who have already bought at lower level can hold their position with stop loss of 398. Even on the Balakrishna industry is also looking interesting. Since last couple of week, stock is consolidating in narrow range. We believe that once stock crosses about 2640, then this stock can also show some rally towards 2750, even 2800 kind of zone. So Balakrishna industry, Apollo Tire both are looking promising at this moment. So one can buy. Even those who are already holding, they can hold on their position for further more upside.
Okay, and what about Lupin, Mr. Palvia? Because stellar set of numbers coming in from Lupin as well. Profit came in at 489 odd crore rupees, and this is against 129 crore rupees in the same period last year. Margins also expanded by 700 basis points. So the stock is in the green in the pre-open trade. But what do the technical charts suggest?
So most of the pharma stocks are doing good, and Lupin,
Mhm.
Arvindo Pharma, Divi's Lab, Dr. Reddy, all stocks are showing good traction in terms of buying. So I think Lupin is also looking promising on the daily as well as on the weekly chart. Series of higher top, higher bottom formation is taking place. The stock is moving in upward direction on the monthly chart also, and now stock is poised for giving a breakout on the monthly chart also. Once the stock crosses about 1240, the next target for Lupin can be towards 1340, 1350 on the higher side. So our advice is to hold on their long position. Keep a stop loss at around 1170 to hold long position for upside target of 1330, 1340 in the continuation of this uptrend.
Mr. Lokpriya, very quick one to you before markets open. Uh, Mr. Lokpriya, how are you positioned asset allocation wise in the blue chip space? Of course, the Nifty has underperformed the small cap and the mid cap index. We've seen that happen traditionally. But what's the allocation to blue chips in India at the moment as a percentage of your overall portfolio?
We run different portfolios. So the large cap fund is clearly all large cap. But in our multi-cap fund, we have probably about 45% towards large cap, and the balance is mixed between mid and small cap. I think that's the allocation, and I think we will stay with more or less those kind of numbers because we don't see the market changing much in terms of the valuation.
Okay, ladies and gentlemen, we have the first trades coming into as far as opening trades are concerned. Nifty slipping a bit. Remember, it's the weekly expiry, down 11 points, 19,431. The battle will be at 400 between the bulls and bears. The bank Nifty down about 75 points, 43,580. A bit of a red tick on the IT index, but remember, the NSE 500, which is the longer and the bigger index, is in the green, even though marginally. Nifty is slipping, which is fine. It's not a problem because it's weekly expiry. Let's look at the index heavyweights. I want to see what Reliance is doing, down 0.3%, 23.29. HDFC down 0.3%, 14.86. ICICI Bank is also in the red, 93.33. As also, I want to see what Infosys is doing, flat, 13.92. We'll shift focus to F&O stocks. Let's look at the top gainers. I want to see what Lupin is doing, 1.3% higher, 12.26. It's a blowout that's happened on this earnings front at least. Power Finance Corporation, there's no let up, 1.9% higher, 268. As Mr. Lokpriya said, valuations are still unchallenging despite the record highs that we see on this particular counter. A very quick view on NSE 500. The stocks that are gaining ground are Brigade Enterprises, 4% higher. Well Corporation, Well Corp, 4.5% higher, 476. Masgaon, something that Mr. Lokpriya prefers, 2.85%, 2042. We'll do a very quick check on high beta, defense and rails and PSUs, and then come back to our guests. Okay, within defense, it's Masgaon, 2.5% higher, 2035. I want to see what Cochin Shipyard is doing, 0.5% lower, 1041. Let's look at the PSU space beyond the defense providers, and it's at the moment PFC and REC, which are the top gainers in this space, 2.6% higher, 1.2% higher. We have a move on MSTC, 1.3% higher, 436. Moil and NLC India about 1% higher each. Railway stocks, the preferred bet that Mr. Lokpriya had was Cheetahgarh Wagons, but today's move is on Jupiter Wagons, 1.7% higher, 316. IRFC, RVNL. I want to see what IRCON is doing. They've got a good order, 154.90, flat at the moment. How about the high beta space? And then we'll get back to our guests. Okay, it's the gainers are R Systems. It's a mid-cap IT company, 1.6% higher, 502. And the stocks hitting all-time highs are Brigade, which we've checked, Power Finance Corporation we've checked, REC we've marked, it's TCS, it's TVS and Colgate Palmolive, 1652, 0.3% higher, and Colgate Palmolive 0.2% higher. Coming straight to Rajesh Palvia. Rajesh, anything that interests you in the market on the long or the short side? The Nifty is now slipping, 19,417. Remember, the first support is at 19,408. Over to you, Rajesh.
Well, I think Shailji, 19,400, 19,380 is the again buy zone for the Nifty. Yes, there is a minor dip in the opening, but I think again market will settle down around 19,400, 19,380. That's the level where we are keeping eye at this moment. So if in next 10-15 minutes these levels are not broken on the lower side, then we are ready to buy this at the Nifty also with a stop loss of 19,350. At this moment, I think one should keep eye on Chambal Fertilizer. That stock is looking promising. In the previous session, very strong buying action, and again, after opening, stock is showing good traction. I think Chambal is one stock where one can keep eye to buy with stop loss of 300. Upside target we are projecting around 315, 320 in the continuation of this uptrend. Another segment that we like after opening, that is real estate space. So one can look at Oberoi Realty at this moment. Overall, the structure is bullish for most of the real estate space, and overall realty is looking promising. We believe that if stocks holds during the day towards 12.15, 12.10 level, then possibly this stock can show upside target of 12.75 to 12.80 in this pullback.
Right. For options traders, I would like to point out a particular Nifty call to the PCR. If they can fire the November 16th Nifty call for 19,400. At the moment, it's priced somewhere like 128, 130, and the high for this was at 160. Should the Nifty take support on the first resistance, which is 19,410, 19,380, then this is something that can be looked at the long side. It's already slipped fairly substantially from days high of no, I'd like to see the 19400 call PCR. It's at the moment trading somewhere like 130, 128. That's the one. Yes, this is the one, down already 4%. And this is something to be looked at should the Nifty take support on the first resistance, which is 19400. We'll keep an eye on it, but remember the price 128.90. Okay, coming back to Mr. Lokpriya. Auto ancillaries and the auto space, Mr. Lokpriya, has come up fabulously well on the radar of investment and equity strategists and fund managers such as yours. Anything that catches your fancy? This is one of the primary plays of consumerist and aspirational India.
Indeed, and I think in the two-wheeler space, TVS Motors, in spite of its run-up, still looks very good for the simple reason that they have executed exceedingly well in both the traditional traditional engine space as well as in the taking market share in the EV space. Now, EVs are the fastest adoption that is possible versus, let's say, four-wheelers, and therefore they have a very long way to go, growth path ahead of them. And among the auto ancillaries, I think there are a number of companies. There's companies which are also now supplying parts to the EV industry and will benefit. Companies like Minda is another which is looking good. Motherson Sumi Wiring, which has not done well at all due to various issues, and also that is also looking well for the long term. I think these are companies that one should look out for because the growth path for EVs and the revenue that they can get from that, and as well as the regular traditional industry is also recovering.
Okay, ladies and gentlemen, I think we should pull up Apollo tires, and I will come to Mr. Lokpriya for the entire tire space. But first, let's pull up this stock. Sudden spike and 2.3% uptick there. It's the top auto space gainer from the F&O space. Second day in a row. And let's do one thing. Let's go to first Mr. Palvia for a quick technical check, and then I'll come to you, Mr. Lokpriya, for the entire tire space. So, Mr. Palvia, what do the technical charts now suggest for Apollo tires?
So as we mentioned before opening also that stock is looking bullish, and we expect this momentum can continue further, and projecting target of 430.35 in the continuation of this uptrend. So I think those who have already bought the stock can hold the position. Most of the tire stocks are doing good. So I think Apollo Tire can be one stock where almost now stock is trading almost near to its all-time high trajectory. So I think the immediate target is 435, 440. One can hold with now a stop loss of 410.
Okay, coming to you, Mr. Lokpriya, now for the entire tire space. This space has been buzzing of late, and we have fantastic numbers coming in from Apollo tires, for example. So, your thoughts on this space?
Clearly, if the auto industry is doing well, then the tire companies need to do well. And if you look, and the other thing that is now helping tire companies is their input cost pressures have also eased, with crude prices having coming down. Their raw material costs are also coming down, and that will benefit them both from a top line perspective, which is the higher volumes going forward, and second is on the cost front, hopefully lower commodity prices, which will stay for the next few quarters. Now, Apollo Tires, it trades only at about 12, 13 times, which is still a very decent multiple for companies of its earnings profile. And, if you look at some of the higher leverage companies like JK Tire, that company also trades at like probably 7, 8 times PE. So these stocks have still valuation comfort on this side.
Okay, CDSL, I think we should pull up this stock as well. One of the buzzing stocks from today's trading session. Coming to you, Mr. Palvia, for CDSL. 2% uptick already there, and the stock has been on a roll after the second quarter numbers. So, what do the technical charts suggest?
CDSL is our Diwali Murat pick, and we are expecting target of 1850 to 1900 in next couple of
Okay.
months. All platform companies are doing good. BSE, CDSL, MCX. Even if you look at the broking stocks, also listed stocks, so they are all doing good as the whole sector is booming at this moment. Participation is increasing day by day. So CDSL is a clear proxy play to participate in this broking industry. CDSL, we expect this momentum can continue. Buy on dips is the strategy. If you get any opportunity near 1600, 1580 is again good level to re-enter in the stock. Your stop loss should be at around 1540. Upside target we are projecting on the positional basis towards 1850 to 1900.
Right. And throwing this question to Mr. Lokpriya, we've seen this digital trinity of Aadhaar as well as, a very strong move coming in the entire brokerage space because of the ease of opening an online broking account. Mr. Lokpriya, do any of these counters, whether it's CDSL, whether it is online brokers, interests you for the longer term, or are valuations already stratospheric? Look at BSE. The stock was at 500 rupees 4 months ago, now above 2000, and there is no let up.
Indeed, I think if I think the traditional story of that the mutual fund penetration, brokerage account penetration in India is still very low. So outside of the tier 1 cities, tier 2, 3, 4, 5 are also huge potentials for these companies to penetrate. Yeah, traditionally they had to have feet on the ground, but now they're reaching them through digital, and so that's making adoption far faster. So companies like Angel or even BSE now, of course, is the overall beneficiary, because whenever the overall market goes up or down, the volumes increase, and it's a beneficiary of that. But individual companies, brokerage companies like Angel One, they have the strategy of expanding online across tier 3, 4, 5 cities, and opening brokerage accounts and having agents, etc. So I think for long term, yes, clearly now it's a question of margins. This is a business of low margins, so whether if they can sustain is a key issue to watch. But yes, they're looking good for the long term.
Okay, and this is a time to mark some stocks. We are at 928, and I'd like to show you the option trade that we had caught hold of. The 19400 call at about 128 rupees. You'll see the magic in front of you on how to pick up stocks. Again, I'd repeat, the 16th November 19400 call at the moment is 138 rupees for you. We picked it at about 128, and let's see if the pivot point gets broken. The pivot is 19436. Remember, the first support was at 19400, which has been tested, and the bulls have won that. So let's see whether it goes above 435, 437 or not. And if it does, this price will always get better and better. Can we see the 19400 November 16th call for Nifty at the moment at about 138.39. Remember, the intraday high was 150. Let's see how it goes from here. So this is how the structure is for the market. Fairly strong moves coming in, a lot of cash counters. Apollo Tyres 422.85. Remember, we caught it somewhere like 400 yesterday. M&M is doing pretty well, 1570. 3-4 years ago, we had 3-4 days ago, we had discussed the 1490 call on M&M, somewhere like 17-18 rupees, if I remember correctly. Apollo Hospitals on a roll, 5166. To you, Mr. Lokpriya, the medical hospital setup has expanded rapidly in India. There was a time when just Apollo hospitals were listed, but now we have a whole plethora of mid-cap hospitals, Narayan Hridayalaya, Medanta, Rainbow, so many of them coming up for listing. Does this space interest you as a long-term stock, multi-bagger space, and what would be your top pick?
The COVID was a wake-up call to India in terms of the number of beds per patients in India still is very low compared to some of the even countries like some of the mid-sized countries like Taiwan or Malaysia. So, which means there is a huge need for expansion of hospitals across board. So, and therefore, we are seeing that this whole market space expanding quite a lot in terms of the number of beds. So, the beneficiaries, the market leaders like Apollo, will clearly benefit. They're one of the market leaders, very well known brand, very well trusted brand, and with their expansion potential, I think their average revenue per bed will also improve over time, and therefore, for as a long term as a space, Apollo is looking good, and maybe some of the companies within that space are also good to look at for the longer term.
Right. And with that, Mr. Lokpriya, thank you so much for sparing not only your valuable time but such wonderful wisdom about how Indian markets are positioned globally and what sectors to look at, and especially what stocks you like. Festive greetings to you, your team, everybody in the family, and the entire TCG group from our side.
Thank you. Happy Diwali to all and to your viewers. Thank you so much.
Right. Now we'll shift focus to picking stocks, and it's a crisis of plenty, and we have the best man with us, Rajesh Palvia. Rajesh, what looks good to you? You talked about RBL back, days high 243, ticking fairly well. You talked about Glenmark, that's also doing pretty well. In fact, the entire pharma space is pretty okay. Alchem we had discussed yesterday. Lupin is down a bit, 0.5% lower, with a rise of 9.1% in open interest. Alchem, of course, fresh record high, but the ticket size is 4,300 rupees. Very difficult to take a trade on the long side. Let's look at Jindal Steel and Power, 635. It's the top gainer in the metal space, 1% higher on open interest. Anything that catches your fancy in the metal space, Rajesh?
So I think from that space, Jindal Steel and Power is the only stock where we are holding our bullish view. Though stock is sideways after the opening, but we do believe that as the stock is holding above 620 level, there is a high possibility that this stock can show good traction towards 645, 650. That's the level we can see in the Jindal Steel and Power. Even one can look at Vedanta also. Though stock is in downtrend, but in the near-term setup, stock has shown a good recovery from the recent low, and on the weekly chart, the stock managed to break out of its falling trend line and sustaining above those levels. So this is second consecutive week where we are seeing higher high-low formation. If at all stocks manages to hold about 234, that stock is looking interesting to move further higher towards 245 to 250 zone. And the third stock, Shelji, where one should keep eye at this moment, that is Coal India. Coal India is looking bullish. This is the one of the PSU stock which is again in the sustained uptrend. Stock is moving in upsloping channel on the daily chart. After opening, we are seeing good buying interest in this stock. Looking at overall structure, we expect this stock can move further higher towards 232 to 235. 335 to 335 is the next target. So one can buy Coal India with stop loss of 316.
We have earnings also today. So Street is expecting stronger auto volumes this time around. What do the charts suggest for this counter, M&M?
So overall long-term structure for M&M is on the bullish side, though some corrective move was there in last couple of months. Looking at the overall long-term structure, stock is almost trading near to its important support area of 1450, 1460 zone. So post earning, if its stocks not breaks below those levels, then there is a high possibility that again stock will regain its old glory, and maybe stock may scale up further to its all-time high level also on a positional basis. So at this moment, one can buy as the risk to reward is in favor of buyer. 1470 should be your stop loss. On the higher side, 1565 is the key level to watch for. Once the stock crosses those levels, then 1650 would be the next target for M&M.
Shell, we should look at Bata as well. So the company posted 38% growth in its profit at 34 odd crore rupees. Now, of course, this was impacted by expenses towards VRS, but operational numbers, they were strong. So, coming to you, Mr. Palvia, for a quick technical check on Bata.
There was a corrective move since last couple of months in the stock. Stock is recover showing some recovery from its recent low. Stock has formed a base at around 1530 zone, and some pullback action was already there in the stock prices. Stock is now trading about to 200-day moving average, that is at around 1570. So immediate stop loss, those who wants to play the pullback trade, 1570 should be your strict stop loss to buy the stock at this moment. If at all stock holds this 1570 mark, then possibly some pullback towards 1640 can be there in the stock prices. Though stock is already in oversold trajectory, so some pullback action we can see towards 1640. So 1570 is your stop loss to buy at this moment.
Fair point. Let's look at some other sectors that are doing pretty well. To you, Rajesh, is Asian Paints. Fairly strong move coming in. The counter at 3105 in the cash space. Given the fact that crude oil prices have dipped sharply and raw material costs for Asian Paints are linked to crude oil derivatives, now at 200 DMA. Rajesh, what are the charts telling you?
So I think all three, four paint stocks are behaviors are almost similar. Asian Paint is also in the recovery mode. Berger Paint is also showing traction on the buying side. Pidilite is almost shown good recovery in last couple of trading session, and now struggling to cross its resistance zone. The immediate resistance for Asian Paint is at around 3130, 3120 level. If at all stock crosses those level, then possibly this rally can extend towards 3200 level also. Even for the Berger Paint, 595 is the immediate resistance zone for Berger Paint. If it crosses those level, then 620 could be the next target. So as Diwali season is there and a lot of expectation towards the sales growth for this quarter, so I think the investors are taking their long bet as the stock is already corrected and available at very attractive price after this correction. So I think some buying traction is going to be there in the stock. Asian Paint, one can buy with stop loss of 3080. Upside target is 3140, and once it crosses those levels, then 3200 could be the next target.
By the way, Mr. Palvia, your pick RBL Bank, that is on a roll today, 1.6% uptick there. 244 is the level, so bang on when it comes to RBL Bank. But I think we have with us our corporate guest as well. Okay, so it's time for us to now shift our focus to our corporate guest, uh, corporate side action this morning. And we have with us Mr. Rangarajan Krishnan, who is the CEO of Five Star Business. So, Mr. Rangarajan, first of all, very good morning to you and festive greetings to you. Let's start with the numbers. I mean, first of all, congratulations. Good set of numbers coming in this time around. The disbursements, if you see for the quarter, stood at 1 odd crores. This is up 50% on a YY basis and 6% on a sequential basis. And the AUM, if you see, we have seen a growth of 44% on a year-on-year basis. So first of all, how do you plan to sustain this kind of growth? And what would be the major growth drivers going forward?
So thank you. Festive greetings to all of you. We are coming back on the back of COVID. So it's almost 8 quarters since COVID has settled, and we have started last year extremely well. We ended FY23 with a growth of about 37% overall CAGR, and the first 2 quarters have just been on the same fix. So we have grown by about 44%. See, the growth drivers are broadly coming in from three areas. The first and the biggest driver for us is the number of new branches that you open every year. So typically, we used to open about 75 to 80 branches pre-COVID, and there is a lot of pent-up demand in the market. For the first half of this year, we have already opened about 83 branches, and we have upped our guidance, in terms of number of new branch openings. So we are hoping to open about maybe another 40 to 45 branches during the year. So we'll end up with at least 125 new branches during the year. So this is a very big growth driver because we are seeing a lot of green shoots of growth coming up in the areas in which we operate. The second growth driver is we always want to penetrate on our existing geographies more deeper. So wherever we already have a branch, our strategy is always also to put a little bit of more number of officers in each of those branches because that helps you penetrate the existing geography in a much better manner and get larger market share. So that's the second piece of growth. And of course, with inflation where it is, there is also a little bit growth in the ticket sizes. So that also pushes up your volumes and disbursements a little bit. So a combination of these three, I think we are fairly confident that we'll be able to glide the same growth path over at least a foreseeable future of next 3 years.
Right. Mr. Rangarajan, welcome to Market Today on Business Today Television, and festive greetings to you. Five-Star Business Finance also celebrates its 1 year listing anniversary today, and it's been a fairly decent ride for your fresh shareholders that have come into this business. Share with us the details as far as ticket size is concerned in terms of loan. As also, if you can share the granularity of business when it comes to demand. Is there a particular space within the MSME sector that is coming up repeatedly on your radar in terms of higher borrowings, better payment terms, as also larger loan sizes?
Okay. Okay. Firstly on the ticket sizes, we used to have an average ticket size of about 3.5 lakhs prior to COVID. And obviously the incomes got impacted during the COVID. So that brought our ticket sizes down. It's a combination of both incomes fairly going down and tightening our own credit policies during COVID. So during COVID 1 and COVID 2, our average ticket sizes dropped from about 3.5 lakhs to 2.5 lakhs on an average. But of course, like I said, now it's almost 2 years since the COVID blues have settled. Incomes are slowly getting back. We are seeing multiple pockets of growth in rural and semi-urban areas coming back very strongly. So we are back to our pre-COVID levels in terms of our ticket sizes. So as of Q2, the average ticket sizes have come back to about 3.5 lakhs, which is what it used to be prior to COVID. And from here on, I think it's going to be a more inflationally led growth. We have always, as a company, believed that volume-led growth is far more healthier, where you're not increasing exposures or risk per customer. So that continues to be the same philosophy. Even during Q2, our volume growth was almost 7% quarter on quarter. So we always focus on adding new number of customers, going to newer geographies, making ourselves more relevant to a wider set of population. So that has always been the growth strategy for Five-Star, and we'll continue to do that. But in addition, of course, without defocusing on what we do, there will always be some marginal inflationary increases in terms of ticket sizes. So that's on the first bit of what you asked. Second bit, in terms of where we are seeing growth really. Um, our core focus has always been on the small business loans. So, MSME is such a wide definition that, everything is MSME, including people who lend about, maybe 1 to 3 crores. But we are in the ultra small ticket sizes. I think we are covering the space between 1 to 10 lakh loan ticket sizes. So that's in our mind, it's a wide spectrum which is uncovered today. Most of the microfinance institutions play in the sub 1 lakh ticket size, and most of the larger institutions want to play in the 10 lakh plus ticket sizes. But I think the missing middle piece is about 1 to 10 lakhs. This is what we have been historically focusing. We have about a 20-year track record in focusing exclusively on this segment. And our sweet spot here is about 3 to 5 lakhs. So we sharply focus on 3 to 5 lakhs. Even within this, we have a strong belief, and we've always upheld that we like more of service sector as compared to manufacturing sector. Even within services, we like to target essential services because the essential services doesn't go out of fashion. So anything which a common man needs to lead his everyday life. So that's the core focus of what we do. It could be a repair shop, it could be a saloon, it could be a provision store, it could be somebody who's selling flowers and fruits. So these are businesses that doesn't go out of fashion at all, irrespective of economic cycles, irrespective of COVID. So we are very
Yes.
strongly biased towards this sector, and that's what we stick to.
Yes, Mr. Rangarajan, and it's beautifully exhibited in your asset size of the balance sheet. Loan sizes of 1 to 5 lakhs, 7 lakhs are sweet spots which larger NBFCs don't prefer because sourcing them is a pain, and of course microfinance looks at loans which are sub 50,000. Absolutely agreed with this point that you are in a great sweet spot. Now I wish to know what is the average lending rate that you have across your loan book, and what is the average borrowing cost that five-star business has?
So today the average lending is about 24%. We give loan up to 7 years. So we are largely focused on term loans. And for loans up to 7 years, we charge about 24%. Bulk of our customers are customers who are moving from informal segments to formal segments. So these are people who have historically been borrowing from local money lenders and informal pools. And we help them graduate to coming into the formal sector. So it's a big economic gain for them because they have been used to pay about 4 to 5% a month to a money lender. And when they come into an organized fold, that's why we're able to attract a lot of customers from informal to formal. And our borrowing cost at this point of time is about 9.7% of the book.
Also, sir, coming to your portfolio,
So,
I actually want to ask him, Shell, that which geography and which sector, is the company seeing maximum growth coming in from?
So sector I just covered. We are seeing, a large focus on essential services and self-employed. So these two are the biggest sectors that we serve. And within this, it's growth all across. So we are not seeing any specific pockets, which is sort of slightly better or worse than the other. And from a geography focus, we are very strongly biased towards the south. We are a Tamil Nadu headquartered company, but we have very significant presence across Tamil Nadu, Andhra, and Telangana. So almost close to 94% of our portfolio today is predominantly from the south, from the four states, including Karnataka, and about 6% is of the recent vintage states in the central Indian geographies.
Okay, we'll wrap it up here since we are short of time. But thank you so much, sir, for taking the time out and sharing these valuable insights with us. And all the very best for the coming quarters as well.
Thank you so much. Thank you.
Coming back to the market, Shell, it's again a muted day of trade, it seems.
Yeah, Tanya, it's the weekly expiry, and Nifty is flat at about 19,426. Remember, 19,400 is where the battle is for the bulls and the bears. That is the option call that we are looking at somewhere between 128, 135 rupees. Bank Nifty is flat on its first day of the weekly expiry, 43,675. But there is a classic trade on the long side in tires, which is Apollo Tires, in the brokerage space, which is CDSL, and all stocks related to a drop in crude oil prices, which is paint companies and OMCs. Over to you.
Absolutely. And remember, Shell, we did mention Apollo Tires in yesterday's morning trade and afternoon trade as well. But with that, it's a wrap. Let's see how the action pans out on the last Street. But you don't have to go anywhere. You just have to stay tuned to BTTV. Lots more coming up for you. So stay tuned, and many thanks for watching.
हैं टेस्टिंग के लिए, बट डेफिनेटली उसका एक कॉस्ट हम लोग चार्ज कर रहे हैं टेस्टिंग के पीछे.
Want to taste this mithai? Take a small bite.